So far, we've talked about the steps we go through for building business credit. So now we're going to talk about financing. Through this venture, there are going to be financing opportunities that come along. And I want to break down two of those financing options that may become available once you start having consistent cash flow. So don't go anywhere.
Legacy Local Impact, Empowering Entrepreneurs.
As we are learning and building our business credit profile and how important it is to separate our business credit from our personal credit, there will be some financing options that will open up along our journey. So let's talk about financing, the 3 C's: credit, collateral, and cash flow. Well, today we're going to talk about cash flow. Maybe you heard of something like merchant cash advance or revenue-based financing, something you may have seen, maybe a commercial on TV or heard it on the radio, and it's grabbed your attention because funding in as little as 24 hours, or a bunch of calls from salespeople trying to sell you this product. Now, there are a few specific situations where this type of financing can serve its purpose, but there's a lot of downside and you have to be careful. But hang in there. There is an option that we prefer to start with, and we think it's more business friendly. And I'm going to share that with you in just a minute. Now, the feedback that we've gotten from business owners that are that have used merchant cash advances or revenue-based financing is you get approved and funded right away, but it's a daily payment. It's kind of hard on our cash flow, and the rate is just so high. Now, maybe you're wondering, how does someone get into that type of product? Well, the salesperson reaching out to this business owners, this is the only product they know. They know it inside and out, up and down, every which way. So when they're calling all these business owners, they put them all in the same box, even if it's not a fit for them. So that's why we do what we do, and we provide services that are more strategic, that will help you in the long run. So let me go ahead and explain to you about flexible revolving lines of credit for small business owners. Now, I don't want to forget to tell you anything, so I might look at my notes a little bit, so bear with me. So once you get approved for a line of credit, you can withdraw the line of credit at any time for the amount you are approved of. It is very simple and transparent and easy to understand. And you only pay if and when you withdraw the funds, and there is no application fee. And it's a weekly payback schedule instead of a daily payback schedule. And the fees are as low as 4.66%. There is no prepayment penalty, and if you pay it off early, you save. Everybody loves to save, right? So, have you qualified? Credit score does not matter. There is no credit check needed. Here's the things that they are going to be looking for. If you have any kind of accounting software or even your business checking account, the company that we work with can actually plug right into either one of these that you have, and it's a view only, to where they can actually verify. At least they want to see $5,000 coming into the account or in your accounting software, so they can see how much that they're going to approve you for. And they make it so seamless. You don't have to send in bank statements. And the thing is, they can approve you within minutes, and you can get funded within 24 business hours. And of course, a US-based business. And if you pay down the credit line, you can use it again. It's reusable. So that's just a couple things I want to break down for you. Now, I want to share with you some screenshots just so you can get a clearer picture as far as amounts that are funded, the weekly payment breakdown. I want to share that with you. So hang in there. So I am excited to give you a little bit more details regarding the flexible lines of credit for small business owners. So keep in mind that they will lend $100 up to $100,000. And I just want to break down what you would pay per $1,000 on any line of the lines of credit that you're approved for. So first, I'm going to start with just $1,000. This is what you would pay per $1,000 for 12 weeks. So here is $1,000 for 12 weeks. And the fees would start at $388 per week. The weekly repayment would be $87.22. And at the end of the 3 months, the total amount you pay including fees is $1,046.60. So that original $1,000 plus the 3 months of fees, which is totals $46.60. Now, let's say we stretch this out another 12 weeks. Let me show you what 24 weeks would look like, which is 6 months. We're going to take that same $1,000 for 24 weeks, and your fees start at $375 per week, and this puts the weekly repayment at $45.41. And at the end of this 6 months, you've paid $1,089.90. So you pay that original $1,000, and then the fee over a 6-month period is only $89.90. So let's get into a little bit more bigger, more raw numbers. So let's take $7,500 for example here. So for $7,500 over a 12-week period, which is 3 months, the fee would start at $29.13 per week. So the weekly repayment would be $654.13. And at the end of this 3 months, the total amount paid back would be $7,849.50. So you pay back that original $7,500, and then over this 3-month period, the fees were $349.50. Now, if you want to push it out another 12 weeks, and let's look at 24 weeks for the same $7,500. So over a 6-month period, which is 24 weeks here, $7,500, the fees would start at $28.09 per week. The weekly repayment would be $340.59. And the total at the end of the 6 months that you would pay back, including the fees, is $8,174.25. So you pay back that original $7,500, and then the fees over that 6 months is $674.25. Now, compared to what's out in the market, this seems to be a really good deal for entrepreneurs that are just trying to get financing where you're not going to get taken to the bank, literally. So let me give you an example of like a merchant cash advance. We'll take that same $7,500 scenario for a merchant cash advance, and you're usually going to pay back the amount you borrowed plus 50% if you have challenged credit. So we're going to go $7,500 times 1.5, and the payback is going to be $11,250. So you're going to pay back that original $7,500 plus $3,750 in the fees that they charge. And even if you want to pay that off early, it doesn't matter. You're still going to pay that full amount back. But for the flexible line of credit, if you decide to pay it back early, that's where you save, because there's no additional fees you have to pay past the day you pay that line off. So I hope that you were able to get something out of this. Now, I know some of you might be thinking, well, I would like to borrow $10,000 to $15,000, maybe $25,000 to $75,000. Keep in mind, the approval rate can go up to $100,000. So if you want to run some numbers by me and I calculate them for you, I sure can. That's not a problem. I hope you enjoy the rest of your day. See you soon.